Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hi, it's Steve and Joe from Fresh Agenda, Everegg's Global Insights team. And Steve, we're back with some market updates leading up to this week's GDT event number 377. We're going to talk about some elephants in the room as well as chart of the week.
Okay, let's kick into the market updates.
Yeah, just firstly looking at across the EU, spot cream remains firm, although we're starting to see some spot milk pricing just easing a bit. The market should ease post-Easter and when supplies of Irish butterfat start to arrive in Western Europe. We're just starting to see the sort of very tight supply conditions seasonally ease, aren't we, Steve? More cows coming out onto pasture, maybe a bit earlier in the season, and maybe a bit more milk in the early part of the spring flush.
Yeah, the idea being what New Zealand had, it's like easier to get the cows going in that start of season and having to move around pastures. So maybe there's a bit of milk in that.
Mm-hmm.
The EEX butter market has eased in the past week. Moderate falls there through quite a long period there. Q2, Q3, some expectations of higher availability, maybe push back on those high cream prices, and maybe some of the reality of the post-Easter trade could be factored into that. And this is interesting to just look along at where we are in the year in terms of price seasonality. Let's compare some long averages. The 2019 to 24 period, we dropped out 2020, which had a big shock, obviously, and weighed that down in the raw analysis. There is a little bit of an April effect here that is apparent, and maybe we'll see that, but not much. But the variability of Easter makes it quite hard to see that unless you focus it all on post Easter. But then again, with the flush, it's a little while before we see the flush being realised, and that has had more of an effect in recent years when things have been more volatile typically. But that'll be an interesting period to get through. But yet the flush is yet to prove itself.
Mm-hmm. Just looking at the skim milk powder futures, short-term futures were a little stronger, actually, have been a little stronger, but skim milk concentrate prices are easing. We're just seeing that in the spot data. Again, these rising milk flows, a bit of improvement in availability of liquid, Steve, and we expect those to ease.
Over in the US cheese market has been trying to lift. There's a lot of cheese coming. The spot market's moved up in the past couple of weeks, but we've got a pretty strong forward curve. So, the obvious thing there is buy spot, carry it, because the carry is worth $550 a tonne when you go out into Q3. But there are some headwinds in demand. It's whether we've hit the bottom or not, I guess, and whether that is going to spell further turbulence for the cheese market as more capacity comes on stream, which we expect to see quite a bit of in Q2. Still got pretty weak demand signals, though, Joe, in that US market, with restaurant trade being weak, retail's holding up, but that's not all in the marketplace. So it is quite an uncertain outlook.
Yeah, very weak consumer confidence there, Steve.
In the butter market, the butter spot market's also firmed a little from the crash we saw a few weeks ago. Spot price is still sitting underneath $5,200 a tonne. And again, is it at the bottom? We're early in the year to say that we've gone past the worst because cream multiples, they might be rising a little bit. Again, Easter will be an important period for to reveal what the true reality is in the market. The carrion butter is far less impressive. There's been a lot of talk of that. We certainly looked at that a lot earlier when that line was stronger. But that's also got some turbulence going forward.
Yeah, and just looking at non-fat dry milk, Steve, we've got a bit of firmness in that curve. Spot's still under $2,600 a tonne, and that curve has really flattened out, perhaps reflecting a bit of the uncertainty in Europe.
Okay, over to GDT 377. Plenty in this one. Start us off, Joe.
Yeah, that's right. And you'll notice the chart's a little bit different. We're just breaking out some of these different product categories because there are a few differences that have emerged in recent times between European and New Zealand product. Just to give a bit more clarity in that breakdown. Now, overall, the price index rose 1.1% for this event, but that hides a strange brew. So behind that, we had less volume offering for whole milk powder and skim milk powder. The amount sold for whole milk powder was down about 21% and skim milk powder was down 8%. Whole milk powder was flat overall. New Zealand product was slightly up. The C2 price for whole milk powder was up 1.1% and also up 1% on the prior Pulse event. EU prices were slightly weaker at this event. Skim milk powder, 1.1% up for that C2 price. And you're going to have a little bit more to say about that later, Steve. New Zealand butter was weaker, and AMF for the first time in a very long time. Those contracts rose. A variety of rises across those contracts between 1.5% and 3%, but first time in a long time we've seen AMF just tick up a bit higher, and cheddar was up 1%.
So this is the new chart we added to break out the European changes, and we just contrasted there in terms of butter what the changes in New Zealand prices were. Obviously some moderate falls in the European product there offered by Solaric, down 4%, quite a correction. It's gone a little further than the market had in Europe for that period. Mozzarella also lost 4%. This is more interesting for the American market. It's gone back just 2 events, but that's a reasonable chunk. Averaged a bit under 4,200 euros a tonne. That's the equivalent of $2.05 a pound in US speak. So that comes into interest, and we'll have a look at what that means just in a little while.
Yeah, just looking across the demand-supply ratios here, Steve, we've been used to finding that very strong demand above the average for butter. This time around also a stronger demand for AMF, which, as we said, it's been quite unusual of late, and stronger demand for whole milk powder on those smaller volumes. Whole milk powder. Now, whole milk powder pricing went back about 2 events and just a much flatter curve there in those C3 to C5 contracts there, Steve. Weaker later than 375. But yeah, just a bit of flatness, really. What's really driven that? Well, China's involvement increased from 48%, but that was a flat tonnage overall that they've purchased. Just reminding again that there was a lot less volume offered this time around. So is it a really positive takeaway? Probably not positive enough, you'd say.
Skim milk powder improved. This is the New Zealand medium heat, improved for most contracts. What's in the general skim milk powder result? And a lot of people went straight to that overall skim average, which went up over 5%. There were some freakish results in their UHT product group, where C2 went up 65% and the C3 contract up 54%. So ignore those because that's someone's got a fat finger or keyboard stuck or something like that. That certainly affected the averages. So the underlying core product, medium heat, moved up a little. And there was a little further separation from competing products. New Zealand had a better performance, put on just $30 a tonne. We saw Arla slip back a bit, and Solaric, the other supplier, added $15 a tonne. So New Zealand's premium went up just a little. Now, taking us back to Pulse, and Joe, this interesting thing about the effect of Pulse becomes a bit more stark here when you see those tall bars, the auctions, delivering a consistently better outcome in the last 5 auctions compared to what the intervening Pulse events were. So this result was up 4.5% on last week's Pulse, just up 1%, as you said earlier, on the auction. That's an interesting trend. I think that's something to think about when reading Pulse outcomes. As you say, it's a different crowd that turns up. Where it was bought this time, North Asian or China's involvement was a little less, and therefore with lower offer volumes, that's a disappointing downward line. And we're down to some of the lowest volumes purchased by that region on GDT. So that's a little sobering. Southeast Asian buyers, however, came back a little more, but really only came back to where they were the previous event. We haven't seen a lot of change in pricing in the last few events. It's not like they're standing out when prices are up or coming back in for the bargain. There hasn't been a lot of change in skim pricing through this event. So it's more a case of need.
Yeah, and just looking at the unsalted butter here that we usually look at, not a lot of change. Weaker around the C2 contract, but again, pretty much a pretty flat curve with a bit of backwardation. And just looking at that premium that we like to look at in fat equivalent terms, AMF, as we said, lifted 2.4% at C2. So that discount reduced by a massive $200 a tonne, Steve.
Slashed.
Still a pretty big discount there. And just looking across at whole milk powder price premium that remained in place and in fact widened a little as a result of this event. Still quite expensive in terms of whole milk powder compared to the underlying value of fat and protein.
And it never stays up there very long.
No, it does not.
So that's an interesting space to watch.
So where does this leave us, Steve? Well, a skim milk powder comparison looks quite interesting there. Those GDT results up above futures, which futures had pretty much aligned with the other regions in the last couple of weeks we saw. Interesting to see whether futures follow the GDT up or they basically stick with those other regional benchmarks in terms of those curves, which had been very closely aligned. And then looking at the butter comparison, GDT continues to report sales above the futures for New Zealand, SGX, the relevant futures there, and well above the CME. The US situation is quite different from the European situation, where shortages are really pushing those prices up very high. That futures curve, you would think, though, may be under a little bit of pressure from what we've seen.
And over to cheese. So this is a little comparison we do after the event. The green line here is the official EU number. It's a spot number, but we'll put it across the chart just to put it in perspective. And then the yellow line is this week's GDT result, which is just a bit under 4,200 euros, as you can see, compared to the fair value, our calculation of a fair value based on fat and protein, which is pretty faithful to that relationship is quite a good driver of the mozzarella value and quite close correlation there. Compare that to where the CME is, and that's certainly we see that forward line being pretty strong. So a diminishing advantage there, Joe. And when you strip it back to what the US parlance is, using a combination of a French and an American term there, in terms of cents per pound, the advantage for the US exporters diminishes once you get past June and is under some pressure. We would expect that to stay under pressure. I mean, the European market's probably overpriced, and with pressure on fat, we'd expect we might see that slip away. So that early advantage, if there's cheese coming, it's got to grab it quickly. So, Joe, one of the major elephants in the room that we don't have many charts for, if any, is the rather serious outbreak of foot mouth disease in Central Europe. What do we know?
Well, at the moment, Steve, we know there are 7 cases altogether, 5 in Slovakia and 2 in Hungary, where this outbreak started. It feels like it's quickly getting worse. These are mostly larger farms. One is part of a Danish dairy group, dairy and pigs, so quite a large operation with multiple sites, very close to the Austrian border. We've seen immediate farm closures and the culling of a large number of animals to try and contain it, Steve. But what are the risks from here?
So there's a sense of dread in the European trade that this doesn't feel contained. And naturally, when you look at the facts, there's probably a higher risk of undetected cases out there with the movement in large herds before these were detected. So, larger farm groups, and these are quite large in the context of the European market, that generally there's movement of animals either between sites or in and out, depending with turnover. These countries are small producers, but mostly into cheese, but the effect will expand if we cross borders, further crossing of borders into Austria and more seriously into Poland. So, Joe, we could be heading to a ban of some larger regional products, larger regions, in terms of, if we're facing a ban of Polish product, that's quite serious for European trade. It could push more product to skim and butter to avoid fresh product and essentially have storable product if certain regions can be quarantined. It's a worsening situation, a lot of uncertainty. Don't think the markets are pricing anything in yet, but watch this space.
And Steve, the other elephant that we just wanted to touch on, where you're watching this, it's the 2nd of April, aka Liberation Day, and it's also the 2nd of April here in Australia while we're recording this. But of course, the announcements haven't happened yet, our time. So we would love to cover and at least have some kind of initial response to what it all means, but we don't have really any information yet.
So we think it's best to wait until we see the US position for all markets and all trading partners, the retaliations and the knock-on effects. that's in the US, the trading partners, and in developing countries that may feel the effects of some of the policy changes. And let's see it across all markets, all commodity markets. I mean, there may be, way impacted into the Chinese market. It might be cheese within North America, cheese with Europe, and butterfat. But let's add it all up once we've seen what comes.
Mhm.
So, Joe, chart of the week. How will you wrap us up?
Yeah, we'll just bring us home, Steve, with something uncontroversial, weather. We've just got some data here about the conditions, pasture conditions in the Netherlands. These NDVIs are a measure of grass growth, and you can see they're quite at the lower end of the range. Several countries in these productive parts of Western Europe look like this. It's been a pretty dry winter, setting up for a dry spring, which isn't all bad. We're hearing that cows are getting out onto pasture quite early, and there'll probably be some early cuts of silage. As a result, there hasn't been much rain in March across Western Europe, Steve. We're just seeing here. So it's a bit of a double-edged sword, isn't it? Not a lot of soil moisture. And while that's great to prevent pugging and getting cows on pasture, if you don't have the follow-up rain, obviously that pasture just doesn't continue over the next couple of months.
And what are those prospects?
Yeah, and flicking through what the EU Commission's outlook is, basically for temperature, it's looking like a long, hot summer for Europe. So these are pretty high temperatures, not a lot to speak of in terms of rainfall. So, it's just going to be something to watch over the next few months, Steve, to see how the spring flush actually comes out and develops over, into June.
So to be clear, these are showing drier conditions. Well, normal rainfall, we haven't shown those, but, warmer conditions, but, on normal rainfall. Offered dry base to start off with.
Mm-hmm.
Yep, this is a watch your space. That's very good. Very interesting. That's all from us. We'll be back in 2 weeks. We can't shoot a video next week. So if you can hang until then, that would be great. Look forward to that.